I'm the program director for the Women's Business Border Center that's operated by the El Paso Hispanic Chamber of Commerce. And thank you, Cindy, for joining us today and being our presenter. We're so excited to have you. I know it's year end and you're very busy, but thank you so much for being a part of our session today to share your expertise with all of our viewers and our audience today. So thank you, Cindy. Before we get started, awesome. Before we get started, I just wanted to let you know that the El Paso Hispanic Chamber, we do have business development specialists here on site that can help you with your business. If you're interested in starting a business in 2021, please reach out to us. We're here to assist you. If you're a business owner that has been impacted by COVID-19, please reach out to us as well. We have a whole team here available on site at the El Paso Hispanic Chamber that can assist you. So we can definitely help you develop your business plan, help you identify some financial resources, and just really get you along your way. And one of our main philosophies here at the Hispanic Chamber in our programs is that you need to build a solid foundation in business. You need to have key people in your corner. And of course, that's why we have our session today, Having the Right CPA for Your Business. And so let me let you know a little bit more about Cindy Maestas Henry. So Cindy is a CPA and a tax partner at Lauterbach, Borshow and Company. She graduated with a Bachelor of Accountancy from New Mexico State University and has over 30 years of experience. So please, our viewers, take advantage of this expertise of Cindy's, and please take advantage of any questions that you might have. After earning her degree, she began her accounting career with the national accounting firm KPMG and later worked for Helen of Troy and a local accounting firm. Cindy joined Lauterbach Borshow in 2007 and she quickly became tax partner in 2014. Congratulations, Cindy. Throughout her career, Cindy has served a diverse client base ranging from in size and industry. She also specializes closely in held family-owned businesses. She's a very active member in our community, and she serves on many boards from El Pasoans Fighting Hunger. She's a board member of the Junior League Endowment Foundation and also for Candlelighters for the West Texas and Southern New Mexico. So she's very busy. And she's also a member of the Rotary Club of El Paso and a member of Executive Forum and a member of the New Mexico State University Business Advisory Council. And she's also part of the 31st class of the leadership of El Paso. So with no further ado, Cindy, thank you so much for being here and sharing your expertise. And for our viewers, please remember that we'll be answering all of our questions towards the end of the presentation. So please make sure to type in any questions that you might have. So with that, Cindy, I'll go ahead and turn it over to you.
Great. Good morning. Welcome, everyone. Happy that you were able to join me today. As Mary Helen said, you'll have opportunity to ask questions, and so please feel free to add questions to the Q&A box at the bottom of your screen, I believe, and I will do my best to answer them at the end of the presentation. Okay, let's get started. So having the right CPA involves discussions about what type of entity to form, what the filing requirements are for those entities, what the filing requirements for payroll are, if any, as well as possible state filing requirements. Depending on which state the entity was formed, if formed in the state of Texas, there will be Texas franchise filing requirements. The different type of business entity structures are sole proprietorship, single member LLC, partnership, multi-member LLC, S corporation, C corporation. For a sole proprietorship, for the filing requirements, there's no separate federal tax return, and single member LLCs can be subject to state business filing requirements. The advantages to a sole proprietorship single member LLC are it's a simple form, few compliance requirements, and single level of taxation. Basically, what I mean by simplest form is you will file Form Schedule C, that is reported along with your individual tax return on the Form 1040. One of the disadvantages to sole proprietorship, single member LLC, it's a tongue twister, self-employment tax and only available for an individual or joint return. We say disadvantage because you pay federal income tax and self-employment tax. Self-employment tax is 15.3%, which is 12.4% for Social Security and 2.9% for Medicare, which is hospital insurance. You can deduct the equivalent portion of your self-employment tax in figuring the adjusted gross income. This deduction only affects your income tax. It does not affect either your net earnings from self-employment or your self-employment tax. On top of the self-employment tax, you will also pay the federal income tax, which that is determined by your level of income. Next is partnership multi-member LLC. 2 or more owners in an arrangement to oversee business operations and share its profits and liabilities. Entity is not subject to income tax. All partnership level income and deductions are passed through to owners. So what is a partnership? It is important to note that partnership is a broad term that includes several different business types. And here is a brief overview of the different partnership variations. So first, there's general partnerships. A general partnership is when 2 or more people own and operate a business together. They are joint owners within equal rights to operate anything within the business. Personal liability and obligations that concern the business are shared between the two. The next one is limited partnerships. A limited partnership is when 2 or more people own the business, but split into 2 branches of partners, general and limited. As a general partner, you own and operate the business with personal liability. As a limited partner, you invest your money, resources, or properties in the business. However, you do not make the right. You do not have the right to make operational decisions. You also do not have personal liability for any business debts. The next type of partnership is limited liability partnerships. A limited liability partnership, LLP, is the same as a general partnership, but they offer partners limited personal liability, as the name suggests. The last and final partnership is limited liability limited partnerships, which is a LLLP. And it is generally the same as a limited partnership, but it also gives limited personal liability to both general partners and limited partners. Now, what is an LLC? LLC, which is short for limited liability company, is a business entity that limits the personal liability of its members. For example, if the LLC is struck with a lawsuit or debt, its owners do not have to use out-of-pocket funds to pay any settlements. LLCs are also considered pass-through entities, meaning that profits or losses generated by the company can be claimed by members on their personal tax returns. For these reasons, LLCs have become an increasingly popular option for entrepreneurs in the last decade, especially as they can be formed by just one person. These type of entities will typically file a partnership tax return, Form 1065. Unless you are a single member LLC, then you file a return in the same manner as a sole proprietorship, unless you elect to be treated as a C or S corporation. A K-1 is generated from the partnership tax return, which allocates the income or losses to the partners according to their partnership agreement. The partner will then use this information in preparation of their personal tax return, Form 1040. So what are the advantages to a partnership? Single level of taxation, flexible governing of distributions, multiple owners without restriction on entity type of citizenships. On the flip side, disadvantages. Self-employment tax, compliance can be complex and costly. General partners pay self-employment tax on all their business income from the partnership, whether it's distributed or not. Limited partners, however, are subject to self-employment tax only on any guaranteed payments for services they provide to the partnership. Over the years, many LLC members have taken the position that they're equivalent to limited partners and therefore exempt from self-employment tax. except on guaranteed payments for services. But there is a big difference between limited partners and LLC members. Both enjoy limited personal liability, but unlike limited partners, LLC members can actively participate in management without jeopardizing their liability protection. So please review your situation. The law in this area remains uncertain, particularly with regard to capital-intensive businesses. But given the IRS's aggressiveness in collecting self-employment taxes from LLCs, LLCs members should assess whether the IRS might claim that they've underpaid self-employment taxes. It is also essential to become familiar with your state's business entity laws before forming a partnership or LLC. A number of fees, requirements, and regulations may differ for both. You can acquire this information from the state's business regulation agency. Here are a few factors that may differ between an LLC and a partnership. Taxation. As stated, both an LLC and partnership have pass-through taxation. However, taxation may still differ depending on which type of entity you form. It is recommended to also consult with a CPA and an attorney before making your decision. Registration fees, with the exception of a sole proprietorship and general partnership, businesses are required to register with the state. Costs may vary depending on the state and type of business. Paperwork. The paperwork required for taxes and registration will also vary depending on the type of business entity. Security regulations. Similar to shares of stock, limited partnership interests are considered securities and are subject to security laws. Partnerships will not have to abide by security laws if they have less than 10 limited partners who are known to them and live within the same state. In some states, the 10 limited partners is increased to 35. In summary, deciding between forming a partnership versus LLC or remaining as a sole proprietor, it is a critical business decision that will affect your organization, taxation, and liability structures indefinitely. There is no right or wrong answer. Rather, the decision should be made based on which type of business structure provides the best set of advantages for your unique business circumstances and goals. So let's move on to S corporations. Corporation that is not subject to income tax. All items of income and deduction are passed through to owners. The S corporation, we call it S-Corp, is a special kind of corporation that passes corporate taxes through to the shareholders. Then the shareholders report this income on their personal tax returns and pay taxes on their total combined income at personal tax rates. The advantages of an S-Corp: single level of taxation. Earnings are not subject to self-employment tax. Owners can take W-2 compensation. An S corporation officer, president, chief operating officer, etc., is considered an employee, and payments they receive for their services as an employee are considered wages. This person is also an owner shareholder, but each of these roles is separate. S-Corp officer wages must be reasonable. The IRS requires that distributions and other payments by an S corporation to a corporate officer must be treated as wages to the extent the amounts are reasonable compensation for the services rendered to the corporation. What does reasonable mean? To find a reasonable salary for an S corporation owner employee, consider how you would find a reasonable salary amount for any new employee. The IRS also has, guidelines to help you obtain that reasonable number. Disadvantages of an S corporation. Compliance can be complex and costly. Restriction on ownership, number of owners, citizenship, and class of stock. Not flexible. Income and deductions and distributions must be allocated proportionate to ownership. Shareholders may only be individuals, certain trusts, estates, and certain exempt organizations, such as a 501c3 nonprofit. Shareholders must be U.S. citizens or residents. The business may have no more than 100 shareholders. The business may have only one class of stock if stock is issued. Next is a C corporation. Corporation that is not a pass-through entity pays its own income tax. Owners receive dividends, which they also must pay income tax on. What are the advantages of a C corporation? No restrictions on ownership. Earnings are not subject to self-employment tax. Access to public equity. markets, owners can take W-2 compensation. A C-Corp is a limited liability entity, which means the company, not its shareholders or owners, is held legally liable for the company's debt and other obligations. Also, you can bring in an unlimited number of investors when your business is structured as a C corporation. They can be individuals or entities such as a bank or an investment group, and they can have different ways of being a shareholder of your company through the various classes of stock you're allowed to issue. Virtually all public companies are C Corps. So what are the disadvantages of a C Corp? Double taxation, complicated formalities and legal requirements. The most often cited disadvantage of using a C Corp is the double taxation issue. Double taxation happens when a C Corp has a profit left over at the end of the year and wants to distribute it to the shareholders as a dividend. The C Corp has already paid taxes on that profit. But once it distributes the profit to its shareholders, those shareholders will have to declare the dividends they received as income on their personal tax returns and pay taxes again at their own personal rates. So what are the following requirements for various business structures? Following requirements for a sole proprietorship and single member LLC. The business activity is reported on the Schedule C of a Form 1040. Filing deadline is the 15th day of the 4th month following the close of the owner's tax year. If you're a calendar tax year, that means April 15th. You get a 6 months extension available to file, but no extension to pay income tax due. That means April 15th, you need to pay what you owe, but you can get a 6-month extension to file your tax return. And you must file quarterly estimated tax payments. So filing requirements for a partnership, multi-member LLC, and S corporation. So you will file a Form 1065 for partnerships and multi-member LLCs, Form 1120S for S corporations. Schedules K1 are issued to owners for their respective tax returns. Filing deadline is the 15th day of the 3rd month following the close of the business tax year. So if you're a calendar year tax filer, it's March 15th. You do, however, have a 6-month extension available to file as a tax return. Filing requirement for a C corporation. You will file your taxes on Form 1120. Filing deadline is the 15th day of the 4th month following the close of the owner's tax year. So if you're a calendar year filer, it's April 15th. 6-month extension available to file, but no extension on tax due. And quarterly estimated tax payments are also due. And I mentioned quarterly estimated tax payments in the previous slide as well. So generally, you have to pay estimated payments if they expect to owe tax of $500 or more when their tax return is filed. These payments are due on April 15th, June 15th, September 15th, and January 15th. And so that holds true for the C corporations, well, for individuals as well, those are the same filing dates, and for sole proprietorship. Next is payroll, reporting and filing. Payroll taxes paid electronically to IRS semi-weekly or monthly. Forms filed are 940, 941, and C3 taxes. One of the most important responsibilities for payroll is to make sure federal payroll taxes are deposited according to IRS requirements. The payroll process includes calculating and preparing paychecks, accounting for amounts withheld from those paychecks, making deposits of taxes withheld from paychecks, and reporting on taxes withheld and deposits made. How the IRS determines payroll tax deposit dates. There are several steps in finding the correct payroll deposit dates for your business. First, you find the look-back period. The payroll deposit schedule you use depends mostly on the amount of payroll taxes you owe based on the past. The IRS determines the payroll tax deposit schedule for employers based on their total gross Social Security Medicare liability for the 12-month period ending on the most recent June 30th. This time period is called a look-back period. For example, the look-back period to submit employment tax deposits in 2020 would be the 12-month period ending June 30th of 2019. So payroll reporting and filing. Payroll taxes are paid electronically to IRS semi-weekly or monthly, and the forms are 941, like I mentioned before. So the various taxes, Social Security, FICA, the employer portion is 6.2% on the first 127,200, and 6.2% is withheld from wages on the first 127,200. Medicare is another tax, and that's the employer portion is 1.45% on all wages, and withheld from wages is the same 1.45% on all wages. Federal unemployment tax, FUTA, is only paid by the employer, and that's 6% on the first 7,000 of wages. The employee has no liability for that. And there's state unemployment, which is called SUTA, and that's paid by the employer only, and it can range from 0.59% to 8.21% on the first 9,000. That's for the state of Texas. And 1099-C reports cancellation of debt income to a person. And that's just annually. You have to look at that. So next, Texas franchise tax. All entities formed, organized, or doing business in Texas with limited liability, LLC, limited partnership or corporation, annualized gross receipts are greater than $1,110,000, reported regardless of tax owed, and only Texas gross margin taxed. These taxes are due on May 15th. You can have a 6-month extension for entities owing less than $10,000 in the tax in the prior year, or you can have 2 3-month extensions for entities owing greater than $10,000 in tax in the prior year. There are information returns also for any business. There's a W-2 and a W-3. They report total taxable wages paid, employer taxes paid, and employee taxes withheld, and that filing requirement is annually. There is a 1099 miscellaneous, which reports for each person, partnership, or LLC paid greater than $600. A W-9 may be needed, and that is filed annually. A W-9 form is an Internal Revenue Service tax form that is used to confirm a person's name, address, and taxpayer identification number for employment or other income generated purposes. Irs Form W-9 is most commonly used by individuals when they are working as a freelancer or independent contractor. If you ever find yourself filling out a Form W-9, it generally means that a business or person who is paying you money needs your Social Security number so it can notify the IRS of the amount. The other forms that are maybe required are a 1099 INT, which is reports interest income paid to a person, and that's filed annually. The next is a 1099 DIV, which reports dividend income paid to a person. That's filed annually. And the 1099-C, which reports cancellation of debt income to a person, and that's filed annually as well. Did I skip something? No, I'm good. So the decision as to what entity is best for you really does, in so many cases, hinge on taxes, and that is why with any business structure related decisions, you are wise to seek the advice of and assistance of a good CPA. So with that, I will turn it over to questions. I know I went through so much information pretty quickly. So if you weren't able to get your questions in, you're more than welcome to reach out to me individually, and I will try and answer them as best I can.
Thank you so much, Cindy. And that was some wonderful information that you shared with our audience today. And now we are going to get ready for our questions. So we could ask Cindy some questions about taxes. So everyone, this is your time. If you could please type in your questions in the question and answer box here on Zoom or through Facebook Live. And so our first question, Cindy, is this meaning only pay taxes over 1.1 million?
For Texas franchise, correct. You have to have 1,110,000 of gross receipts before you are subject to any Texas franchise taxes.
Okay.
Other than that, you still have to file a form, a report, but it'll be a no tax due report.
Okay, our viewers said thank you so much. Our next question, Cindy, is asking, can you expand on the Texas franchise tax? This is the first year I hear about it.
Okay. Well, if you're registered, if your entity is registered in the state of Texas, you are subject to a Texas franchise tax. So there is an annual filing requirement, and typically you won't pay tax unless your gross receipts exceed the 1,110,000. At that point, there are different, depending on the jumps of income that you have, gross receipts will determine on what you pay. And are you a manufacturer or are you a retailer? There's different tax rates. I'm happy to, it's a little more involved to go into that for today, but I'm happy for you to reach out to me and I can give you a better explanation.
Okay, sounds good, Cindy. Another question is it true that if you don't have any sales, that you will get fined for not letting the comptroller know that you don't have any sales of your company?
If you're referring to sales and use tax or federal, I'm not sure what they're referring to.
I think it's state tax.
For the Texas franchise or
yes.
sales and use tax. Either way, you need to, there's a reporting requirement. If you do have sales, even if they are exempt, you would still need to file the sales and use tax return, as well as Texas franchise. You will be penalized for non-filing, even if you don't report the Texas franchise. Even if there's no tax due, they will give you a little bit of a penalty depending on how long it's delinquent.
So I guess the best rule of advice is to at least let them know if there's no sales or what the amount is, right, Cindy?
Correct.
Okay. There's another question asking, an attendee is asking, what is an S-Corp exactly?
Okay. Well, an S corporation, let's see, where do I start? You can create an entity, an LLC, which can be, like I said, a single member LLC, a sole proprietor, or it can be a multi-member LLC. At that point, you can make an election to be treated as an S corporation, which is just a little bit more flexible. Well, it's flexible in some ways, and then it's kind of confining in others. You just kind of have to figure out what you need, what business structure is going to be best for you. And that'll be conversations to have with an attorney and a CPA to help find the right fit for you. So it's basically like a partnership, but a little, you can pay yourself W-2 wages and you can't pay yourself W-2 wages in a partnership. You have to just make distributions and contributions according to your ownership percentage. And in the partnership, there's flexibility to you can own a certain percentage, but then you can participate in profit and losses in a different percentage. I don't know if I've answered your question, but give me a call and I'll try and answer anything I haven't answered.
Great. No, thank you, Cindy. I know it could be a little complex, but thank you for offering to answer the questions offline. Our next question is, I'm an independent contractor and take $5,000 a month from my business bank account to cover my personal expenses. Can I deduct that?
No. So you're a sole proprietor and you're filing a reporting on your Schedule C is what I'm assuming. No, you don't take a deduction. That's more of like a balance sheet item. It's just like a draw. So the only thing that you can take deductions are actual business expenses. But you don't have to pick that. You don't have to pick up that $5,000 as income on your tax return either. Does that make sense? You're picking it up already as part of your gross receipts in your Schedule C.
And I guess that's why it's best to leave it to the CPA, right? To structure it best. Most definitely. Were you ready for the next question, Cindy?
Yes.
Okay. Is taking a home office deduction an audit red flag?
No, not necessarily. I think if you have a legitimate home office, you are encouraged to take that deduction. I mean, it's not, there are little limitations for that, but it's not a red flag. Take it if you can take it. Just be, if you try and depreciate that portion of your home, if you sell your home, you're gonna have to recapture that depreciation, which just means ordinary income to you later. So you may want to not include depreciation, but take a portion of utilities and whatever other expenses you have for your home, property taxes, mortgage interest.
Okay. And the next question is, what about self-employment taxes? How do I pay self-employment taxes?
Well, self-employment taxes are paid. You can make estimated payments, which I had mentioned, April 15th, June 15th, September 15th, and January 15th. And that's the best way to do it, so you're not surprised at the end. And then it is paid through when you file your Form 1040, it's calculated based on your gross income or your net income. Sorry, not gross. So it's just planning. If you're projecting what your year is going to be, and just making estimated payments based on that, and the percentages that you'll be liable for, and then hopefully it should all just kind of balance out when you file your tax return, so that you don't have a big balance due April 15th.
Okay. Thank you, Cindy. And the next question is, what's the difference between being a sole proprietor and being self-employed?
No difference. Sole proprietor is meaning you're a self-employed individual.
Okay, thank you. Is leasing better for tax purposes than buying?
What are you leasing? If you're leasing a car, there's really no difference. I mean, if that's what you're talking about. If you purchase a car, I'm sorry?
How about an equipment, like I guess industrial equipment? Is there a certain amount of the value of the equipment, that would be better if you buy it than leasing?
Oh, so for equipment, it depends on you can lease it, you can take a deduction for that. It's really considered like a rent for equipment, or you can purchase it or lease it with an option to buy at the end, which means you can capitalize it and depreciate it over the life of the equipment. Or there's new laws where there's Section 179 where you can take, or bonus depreciation where you can take 100% expense for that purchase. So that's not an easy question to answer, but depends on what your needs are, and a CPA that can help you analyze and project what's going to happen.
Most definitely. There's a lot of factors that come into play, I would imagine, right, Cindy? Mm-hmm. Most definitely. But we'll go to the next question. And the next question is, can I reimburse my employees for their personal health insurance?
You can. There are some rules to that, but yes, you can. Rules that are a little, involved? So off the top of my head, I know you can, but there are some limitations.
Okay. Another question is, if I open a business online that will sell all over the USA and possibly around the globe, what kind of corporation will be good for this?
Well, are you going to, depends. Right now, C corporation, the top tax rate is 21%. I mean, that could change. I don't know what's going to happen with this new administration. That's usually, that was more enticing or to individuals last year or the last 4 years. So either, it depends on what, do you want to pay yourself a W-2? I mean, I think an S-Corp or a C-Corp might be good for you. I mean, it just depends on what the new administration is going to do also. Either one at this point would be good.
Okay. Is there certain databases that they sell to help you to keep up with the tax in different states, Cindy?
I'm not aware of anything specific. I mean, I'm sure there's always something out there, but there's a way to keep track of it, like through QuickBooks or something like that. You can set up the various states and for the jurisdictions and the taxes for that.
Oh, okay, great. Our next question is, if you pay someone in Mexico as an independent contractor, how do you issue them a 1099 if they have no social security number?
So if you don't have social security number, there is, I think there's a withholding that you're supposed to assess on when you're paying them. I'm drawing a blank on the form at the moment that you would report that, but there is withholding. I think it's 30%. So it would really entice them to give you any information you need.
Okay, thank you, Cindy. The next question is, do I have to include my spouse as a member of my LLC? Are there advantages or disadvantages for that?
No, you don't have to include them. Really no advantage. I mean, if it's you and a spouse, you're still considered a disregarded entity. So a single member LLC. I think you can elect to be treated as a partnership and file a Form 1065. But there's really no advantage or disadvantages depending on how you all want to be represented in the business.
Another question is, how much do I have to make to be classified as a small business in revenue? Is there a certain amount that you would have to be generating to be classified as a small business?
Oh, not that I'm aware of. What maybe there's, I don't know if there's, I'm sure there's guidelines somewhere but there's nothing specific. But number of employees, gross revenue, I mean, that would just probably take some research to figure out, depending on to which category you fit in.
And I guess our next question would be, what are the requirements to maintain the LLC? Any reports or documents I need to submit, file, or keep up with?
Well, whether you're a single member LLC or a multi-member LLC will depend on which return you're going to file. If you're a sole proprietorship, it'll be the Schedule C on the 1040. And if you're a multi-member LLC, you will file the Form 1065. You will have, if you're paying payroll, you will definitely have to file the 941, the 940 reports, the W-2, W-3. If you're, whatever state the entity is registered in, there may be some state filing requirements. If you're a retailer, you're selling goods and you're collecting tax, there's sales and use tax, there's all kinds of stuff. It just depends on what kind of business or what kind of LLC you are. So if you have more questions about that, please reach out to me and I'll try and walk you through so I get a better idea of what your business is.
Great, thank you. Thank you, Cindy. Our next viewer has a question, and he mentioned, I started my business recently, which is CBD Pros, as a 50/50 partnership under an LLC. I want to start a second location soon with the same partner. How do I set up a second LLC that completely separates the liability, etc., from the first one? And is that considered a series or a master LLC? I want to separate it and have a holding company, but not sure what is the best legal structure.
It could be, you could have the holding company at top and a series of LLCs that it owns, and to keep it separate. So there's only one form 1065 that would be filed, which is the holding company, and all the separate LLCs will feed into that. It's a good question. It's a good planning opportunity to sit down with an attorney and the CPA who can talk about the various pros and cons and what the tax repercussions are.
Great. Thank you, Cindy. And our next question says, what guidelines do you use to decide when you pay employees monthly, semi-monthly, etc.?
I think it just depends on how often you want to pay. There are some guidelines, but I think it's more of a preference thing than anything.
And our next question is, Cindy, how do you know that you have the right CPA, and what questions would you recommend for a business owner to ask as you're scouting for one?
Right. Well, it's a two-way partnership between a CPA and their client. You really need to communicate and ask the questions and plan things or analyze things before you make decisions, and that'll really help you avoid any surprises at the end of the year. I mean, so I have some clients that just make decisions and don't think about what the consequences are or what the tax consequences are, and they get a really big surprise come tax time. And so the kind of questions are, I mean, what do you need? You need to find out, do you want to meet quarterly? Do you want to meet monthly? Do you want me to help you with financials? Do you want me to review your financials? Do you need help with setting up your books? There's a whole dialogue. It depends on what your needs are. I mean, if you're comfortable keeping books for your business and books are really clean and you just need occasional consultation, that works. Or if you need more hands-on, that works as well. It just really depends on what your needs are.
And their specialty, I would imagine, right, in the industry that they have their expertise in.
Right.
Most definitely. So is there anything else that you would like to share, Cindy, to our viewers today in closing and wrapping up today's session before we have some other questions that come through? But just wanted to see if you wanted to share any best practices, tips, anything like that with our viewers today.
When you're opening a business, there's so much that goes into it, so many things you know or you don't know, and it's always good to have a good team behind you. I work closely with attorneys all the time. We work hand in hand because we both have different expertise. Is that the right word? So, and so that is where I would start every time, is talking to your CPA before you do anything, or finding one, saying, I'm about to open this business. This is what I'm trying to do. What's going to be the best fit for me, so that we can better guide you and not have to clean up if you've already made a decision and you've already created an entity and it's just, it's a mess at the end. Try and avoid messes.
Most definitely. We do have another question. Our viewer is asking, Texas franchise report is needed if I open a business here, but if I'm selling online, do I need anything else to pay taxes for other states?
Well, if you are, there's a thing, if you're not registered in Texas, or maybe you are registered in Texas, depending on which way it is, There's a nexus, it's called nexus in Texas, meaning do you have an office here? Are you operating out of here? Even if you're not selling here, you still will have Texas franchise reporting requirements. And for the various states, you would just have to look and see if there was any taxes that you're liable for based on what you're selling. It just depends. Every state is different.
Awesome. So with that, it looks like we have concluded all of our, or answered all of our questions. Cindy, I thank you again for taking time out of your busy schedule to present to our audience today. And thank you to your team for helping us put this together, and to my team that's behind the scenes and making sure that we had a very good session. So thank you, Cindy. Thank you. I hope you have a happy holiday with your loved ones, and to our viewers, happy holidays, and let's look forward to 2021. Thank you. And
Thank you.
before we close and end our session today, I did want to remind our viewers that we do have our membership posada. It's our year-end mercado, which is going to be December 18th from 5 to 7. It is a virtual event, but this is the time that we recognize our small businesses in different categories. Of course, our Volunteer of the Year. If you're a business owner and you would like to showcase your products and services, we do have opportunities for businesses to showcase their products and services. So please reach out to us, and you get a 3-minute presentation, some hand sanitizer, and plenty of networking. So thank you so much, and you all have a great end of the year.